Well, welcome back. Bitcoin rebounding slightly this morning. Take a look at Bitcoin at 40,395. The crypto fell below 40,000 yesterday for the first time in almost a month on growing concerns of higher interest rates and rising inflation. Joining me right now is the head of Republic of Crypto, Andrew Durgee. Andrew, good to see you. Thanks very much. What do you make of these moves? Some are predicting Bitcoin could go as low as 30,000 by June. What do you see?
Yeah, I think we're continuing to see more and more adoption at this point, and adoption will help stabilize the price inevitably. We had huge announcements coming out of the Miami Bitcoin conference, in particular, Strike's integration with Shopify, Blackhawk, and NCR, which are some of the largest payment processing companies for retailers globally, looking at hundreds of thousands of potential Bitcoin retailers adopting Bitcoin as a form of payment. And that includes like Walmart, McDonald's, Home Depot. They're all customers of those payment processors.
Yeah, I mean, I know you were at last week's Bitcoin conference in Miami. I heard it was incredible, really well attended. What is the role that the city is playing? Because I know that Suarez, the mayor there, has made crypto and digital coins a priority.
Yeah, he has really, Mayor Francis Suarez has really leaned into the crypto space, has welcomed adoption and companies. We're seeing dozens and dozens of unicorns moving to Miami now and establishing either their home base or additional offices, and it's really revitalized the city. I'm actually from South Florida, so I've grown up around Miami, and seeing what's happened in Miami now over just the past couple of years has been absolutely incredible, and Mayor Suarez has been a really big proponent of that. So we're going to continue to see that. And there's other cities, too, globally that are really making that change. Seoul, Korea, in particular, just had a big regime change. They have a new president there who's incredibly crypto-friendly. And some of the new regulatory frameworks that they're going to be putting out in Korea are going to move this market quite aggressively, which is Korea has really been left out of the crypto space the last couple of years just because of the regulatory frameworks they had there, which are seemingly going to be changing this year. So you're going to start to see a lot of cities start to make this level of adoption, and large cities, too.
Steve Forbes, jump in here.
I'm wondering, in terms of regulation, the Biden executive order, people thought, oh, that was good for the industry. But when you read it in and see all the agencies that are going to get involved, it doesn't look like it's going to be a smooth future. But I'm wondering, do you believe that stable coins eventually are going to be a real challenge to currencies like the dollar, government currencies, when you can use them for payments easily, and they're also stable in value?
Yeah, the executive order is kind of a mixed bag. There's a number of good things and kind of bad things associated. One, there's dozens of agencies involved in the executive order. Steve, certainly know you're aware of this also. And that's a lot of cooks in the kitchen at one time. And that makes things very difficult to determine what are the right steps, the right moves. But the reality is crypto touches a lot of things. So they're trying to understand whether or not what the positive and negative impacts are for all of these different departments. But it is seemingly a disorganized order, from our opinion. On the stable coin side of it, that is an area where the central banks are currently paying attention, right? Even central banks themselves are looking at issuing their own digital currencies as maybe either a competitor or a replacement for some of those stable coin solutions. The industry itself needs stablecoin products. Stablecoins are something that are essential to the economic model of what we see on the trading side, especially the high-frequency trading side. And understanding what the effect of the stablecoins are going to be on sovereign nations and their own capital markets is going to be really important. So, right now, I think we're in kind of a fact-finding side, at least from the administration. From the administration's angle, but stablecoins are going to be something that I think are going to be in a crossfire for a while as people really try to determine where do they sit, and in particular, what are the tax positions associated with stablecoins that are like pegged to the U.S. dollar.
Yeah, I mean, it's interesting to see anytime you see tech stocks sell off, Bitcoin goes down with them. I guess it's seen as growth, and when you want to sell growth, you sell what you own, whatever you can.
Yeah, I mean, the truth is crypto is highly liquid, right? So it's very easy to move in and out of those positions, and sometimes even easier than in your traditional stocks. There's definitely correlation between the FANG group and the tech stocks, which as you're referencing. But there is starting to see a little bit of a miscorrelation with the rest of the market in some instances. So we have been waiting for that disconnect for a while. We really wanted to kind of see crypto go in its own direction. But it makes sense at this point with the level of adoption that we've seen and the level of institutional money that is now in the space that it does find itself correlating more and more with the tech stocks themselves.
All right, Andrew, great to get your insights on that. Thanks very much. We'll be watching. Andrew Durgee joining us this morning on crypto.